You're listening to the Millennial's Choice Show, Canada's most trusted podcast on all things real estate, finance, and entrepreneurship. Here's your host, Matthew Ablacan.
All right, what's going on, guys? We have another episode for you guys today. This is a very, very important one because a lot of you are in dire situations and a lot of Canadians are in dire situations. So I want to give you a strategy that took me 12 years to really understand, and I was being prepared to really understand how it works. And now I'm actually using that strategy for myself and for a lot of my clients. That strategy is really understanding capital gains versus capital losses. And we're going to get into what both of those mean. We're going to talk about the history of capital gains. We're going to talk about what our federal government here in Canada recently proposed in their budget and how that's going to impact the real estate market and capital gains. Then we're going to look at capital losses, what it is, and how the wealthy people use the capital loss method to actually build wealth and make money. We're going to talk about all of that. I'm going to share some personal experiences with you. So let's jump right into it.
But before we do, huge disclaimer, guys. We are not giving accounting advice. If you have any specific questions about your specific scenario, please speak to your accountant.
This is for educational purposes only. Information purposes only. It's not a one size fits all. So I'm just going to be sharing my personal experience with you guys and what we just talked about. And you guys really want to stick to the end to really understand how capital loss works. Because I'm willing to bet that some of you guys right now are in negative cash flow situations or have bought a property at the height of the market that actually has gone down in value and you don't know what to do with it. And I bet you're in one of those two situations. So this is an episode for investors, people with investment properties. If you don't have investment properties and you're looking to get in, it's a great episode for you to understand these topics. But if you're listening to this, you own your own home, this does not apply to you today because capital gains and capital losses apply to investment properties because we're a real estate show. We're not talking about stocks, bonds, mutual funds, or crypto. It applies to investment properties. So if you live in your home, these do not apply to you because you don't pay currently capital gains on your home, which means then you do not have access to capital losses on your home. So it's just for investors. And I hope you guys can appreciate that. I feel like there's a huge need for this, Danny. Like I even if you're a realtor listening to this, like I've been able to get a few listings just from this strategy. So consult with your accountant, consult with your lawyers, and find out how what we're about to talk about high level is going to apply to your situation. And of course, if you're looking to sell some real estate, then you could very well reach out to us and we'll book a one-on-one with you guys.
Yeah, exactly. And I was just going to add to that. It's not a one size fits all. So make sure you're talking to the right person. You're talking to the specialist and let's get into it, man.
Yeah. So what are capital gains? Let's just be very, very, brief about it. Capital gains, capital losses, what are they? So capital gains is very simple. Capital gains is the profit that you make on an investment. Again, we're focused on investment properties today, but capital gains does apply to any investment that's available to you. So for example, stocks, bonds, mutual funds, crypto. Now, I'm not saying there aren't methods where you could avoid capital gains, such as a tax-free savings account if you're investing in a stock. But that's not our focus here. The point of what capital gains are is for you to understand just simply what they are. They are profits on investments. So if they are profits on investments, Danny, what are capital losses?
Real quick, profits on investments when they've been sold. Just to make that clear, this only applies to when you've sold it. So if you have a property, it was an investment property, it only gets triggered when it's sold. Just wanted to put that out there.
Now, another thing, some of you might have just heard that and said, that's not really, it's true, but there's also another aspect to it. Did you know that in when you die, eventually when you die, the CRA deems that you disposed of your assets the day before you died, even though you may have not. So capital gains will get triggered upon death as well, even though the asset has not actually been sold off.
Yes, that's a good point. Good point.
Yeah, so it's the profit on, how about this? It's the realized profit on your investments. But at the same time, there is a loophole with CRA that if someone was to pass away, the capital gains gets triggered upon death and they say that you basically sold your properties or your investments a day before you died. That's a sidebar note.
Sidebar.
So capital gains are profits on investments. Capital losses thereby are?
It's a loss on your investment.
Exactly. So you buy something, you don't make any money on it, you actually lose money, you've incurred a capital loss. These are, I use capital loss as a vehicle. Capital gains is capital gains. Government wants their share. You made money. Some of you guys say, well, some parts of the world, you don't pay capital gains. I get it. Here you do. And we live here. So that's what we're talking about. Yeah. This is the environment. I'm a big believer about knowing the system that you're in. We're in this system. So let's briefly talk about, not to bore you guys with details of like history, but we want to understand where and when did capital gains come from. So in Canada, capital gains was first introduced in the early 1970s. I believe it's 1972. And capital gains came into effect at that time. Capital gains tax came into effect at that time. Remember, capital gains are just profits. This doesn't mean it's tax. Capital gains tax came into effect in the early 1970s. So basically the government said, hey, we want a piece of the pie. You're making all this money. We're giving you the country to make the money in. We're giving you the infrastructure and all that. We want a piece of it. So when it first got introduced, the tax rate was 50%. So meaning, if you made $100,000 on an investment, 50,000 of that 100,000 stays with you tax-free. The other 50,000 gets added to your personal income if you made it under your personal name, meaning you held the property under your personal name, or it gets added to your business income if you held the property under a business. So that was the tax rate at the time. Now, in the late 80s, early 90s, there was a crash. So in the late 80s, just before that crash happened, they ended up increasing the capital gains tax to 75%. So now using the same numbers, if you were at $100,000 profit, 75,000 of that would be added to your personal income and you'd pay tax based on that. The other 25,000, you'd keep it tax-free. Now, it went like that till about the year 2000. And in the year 2000, the government actually brought that back from 75% to 50%. And for the last 24 years, we've had it at 50%. That's the history of it. Now, in April of 2024, the federal government proposed this increase in the capital gains tax. And there's two different proponents to it. If you own the investment in your company, then automatically any of the capital gains is going to be subject to a 66.6% tax. Okay? If you own the investment in your personal name, the first $250,000 is going to be taxed at 50%. So if you only made $100,000, it's still 50% if you own it under your personal name. If you make $251,000, all of it is taxable at 66.6%. So it's a huge difference when you're paying tax on 50% then versus 66.6% because those numbers just increase, right? So that was proposed in April of 2024. It's probably going to take effect in late June. They're saying June 25th, 2024. And so we have to see how they vote on that. Chances are it's going to get passed, but that's really the history of capital gains right now. So all over social media, if you guys are on social media, everyone was talking about how this is going to destroy the real estate market. And on the news, the Canadian Medical Association came out and said, hey, we urge you to reconsider because there are plenty of doctors that want to sell their practices that now are going to be forced to pay higher capital gains because when you sell a business, it's a capital gain. And so they're like, doctors are just going to leave the country. They're not even going to sell their practice. All those people are not going to have doctors to look after them or someone to really help them. So it's caused a frenzy in the media. And all I'm saying to you is that, listen, this is the system you're in. You can cry about it. You can whine about it. It was 75%, in 89 and 90, all the way up to the year 2000. So it was higher back then, right? My point is, it's the system you're in. Learn how to navigate it. So that's what's happening with capital gains. Anytime you sell an investment property or Eventually, far be it from you when you're young, when you're old and you're 100 years old and you die, the day before you died, the government says capital gains tax has been triggered. You've sold your investments before you died. So your family, your estate is the one who actually has to take care of that in that scenario. Why is this important? Why are we talking about it? What did I say at the top of the episode? You guys are most likely, I'd be willing to bet, if you're investors, have cash flowing properties that are negatively cash flowing, and you have properties that you bought at the height of the market that have went down in value below what you bought it for. So you've incurred, on paper, a loss. How's that beneficial to you? Let's get into capital losses. You want to add anything to capital gains?
No, I think you covered a lot of it. I think there's a lot of people in social media that are just really, scaring people and saying, this is going to make the market crash. I don't think that's going to happen. And we'll talk a little bit about why I think that, but let's get into it.
So there are strategies available to you. And I say this with, the understanding that a lot of people listening to this might be first-time home buyers, might be first-time investors. They may have a portfolio of 1 or 2 properties, or we might have some whales on here that have hundreds of properties. We don't know. So I want you guys to understand that the bigger that you get, there are more tools available to you that you can use. And just as a little case in point example, the former president of the United States declared bankruptcy a few times in his career, and he uses that as a tool in his business. That's an example. Permanent life insurance is a tool that wealthy people use in order to offset future capital gains and offset cost of going through certain procedures after you pass away and your estate has to take over some of your portfolio and different things like that and pay taxes. So there are tools available to you. Capital loss is one of them. So how do capital losses work, right? So you bought a property, $500,000 at the height of the market. The property is now worth $400,000. Without, adjusting what you paid for it, including closing costs, including commissions, including whatever land transfer tax, lawyer fees, which you can add as an expense to your purchase price. Without doing all that, let's keep the numbers very clean. You'll do that with your accountant. Let me just show you how it works. You bought something for $500,000. It's gone down to $400,000. Let's say after all was said and done, you had a capital loss of $100,000. Okay. That $100,000 stays on your file, your tax record with the CRA. It stays on your tax record. And all of a sudden, one day down the road, when you have a capital gain, when you make money, because assuming you're going to keep investing and one day you're going to make money on something, then that $100,000 capital loss credit that you have on your file gets applied to the future capital gain. And it's not a write-off. It's actually just simply a dollar for dollar swap. So I'm going to give you a personal example. Back in 2020, I invested in a medical stock and I invested $150,000 in that. And I lost so much of that money. It's unreal. I lost like 97% of the value of that company. It was super risky. I did it. I regretted it, but I learned a valuable lesson in there. A few lessons. Number one, you're doing really well in real estate. Don't chase something that comes your way that's shiny. That's not your thing. It was risky. Shouldn't have done it. Shouldn't have done that much of it, personally. Here's the thing. I put $100,000 into the stock in my regular account. The other 50 went through a tax-free savings account. Tax-free savings account, if you make money in it, you don't pay capital gains. If you lose money, you don't have the privilege to use capital losses. So I lost that money. The $100,000 was in my regular account. I lost the $100,000. So guess what? I had a capital loss credit on my file for $100,000. What else happened now in 2022? Fast forward a couple of years. I sold an investment property. I freed up some capital. I profited. I bought the property for $390. I sold it for $990. I profited $600,000 before expenses. So the capital gain was huge. And the capital gains tax was huge. That $100,000 capital loss credit that I had, dollar for dollar, wiped out $100,000 of the capital loss tax that I incurred.
That's insane.
Yeah. So I literally got back $100,000 because I would have had to pay it to the CRA when I sold the property. So I was able to recuperate that. That's what I mean by as you get bigger, you do certain things, you take more chances, you have more vehicles available to you. If I had invested in that stock and lost everything, and I never had any other investment to offset that loss to, I lost everything. But some of you guys are sitting on crypto portfolios that are in the negative. Some of you guys are sitting in investments that are in the negative, properties that have gone down, stocks that have gone down, crypto that have gone down. You can sell, get out of that position, get out of the stress. I know what it's like to be stressed when your investments are down. Get out of that whole position, stop losing money, incur the capital loss, keep it on your record for life, and then you recuperate yourself, you regroup, you re-strategize, you follow the market, you see what's going on, you invest eventually, and then one day when you make money down the road, you simply write off that capital loss against that capital gains tax. Get it back.
These are the golden nuggets, guys. This is huge. This is a game changer for a lot of people.
This is huge. Realtors, if you're twiddling your thumbs listening to this, hoping for, the better moments and better times for you and your clients, you're mistaken, man. You need to bring value to your clients. This is one way to bring value to them. Give them a call. Hey, this is an option that's available to you. You want to incur that loss, but get out of it. You're stressed out. You don't have peace of mind. You're negative cash flow. You don't want to deal with tenants. Do you want to get out of it, exit your positions, and just wait? Wait till the right time to invest in something else.
One thing that I respect a lot about you, dude, is you literally are just so open to sharing, like, guys, I made $150,000 mistake, and here's what you can learn from my experience. A lot of people aren't willing to do that. So when you obviously told me about this like before, bro, I couldn't even believe it. I'm like, there's no way like this happened. But that just goes to show like you are somebody that knows a lot about real estate. You started investing in real estate so much, right? And you've done really well for yourself that way in terms of your portfolio and those kind of things and helping other people do the same. It's just crazy how like if you take advice from someone or listen to someone about a tip about something and it could go south very, very badly. But at the same time, like the bounce back of it all, of how you probably went through a lot of tough times when you made that investment and you got the loss, and then you went and you figured out how to bounce back. Like, bro, that's insane. That's a crazy story.
That was the first time I had my laptop open. It was 2020, late 2020 or early 2021. So it's still COVID rules, right? And I had the laptop open. I woke up and I check it because look, bro, stocks are so stupid, man. You should literally check it every single day, every single hour. I'm like, bro, I don't have to do that with my real estate. I check it and all of a sudden shit hit the fan with this company. It was in the morning and I literally was in my room. I was like, no. Like, I was like, bro, I lost it. I literally did a video that one day I'm going to show like James and Sophia and my kids one day in that moment of saying, bro, this is what daddy went through. You might see this as like things are going well now, God willing, but this is what daddy went through. It wasn't easy. I lost the 47K. That I'm not getting back, unfortunately. That's a lot of money still. 100K I got back. And now what it's done for me, Danny, is like, so I own, all of our properties are pretty good because I know how to buy properties, right? So one of them though has gone down in value and it's a vacant residential lot in Sable Beach where you could build a cottage. So I bought it and by the way, like, thank you for saying you respect that. But guys, I don't hide anything. I'm an open book. You guys, this is all in my, I don't know if you could pull up people's CRA stuff. I think it's private, but like, it's all documented. It's all with the government. Like, it's not hiding anything here. So I'm willing to share it. I bought this property for $225,000. Okay. I got it appraised recently at 180. It's probably now, that was like a few months ago, it's probably worth 160 now. It didn't go up. It's cottage country. Cottages are there but if you guys want to buy a cottage, now's the time to do it. Yep. There's a lot of opportunity, people dumping them, waterfront, good price, etc. So I bought this property. It's gone down in value. Okay. So what can I do now to activate capital loss? Well, I could sell it for fair market value. I can sell it and incur a loss. Now you might say, that's so stupid. Why would you do? You spent $225,000. Now you're going to incur a loss. Why would you do? Just keep it. One day it's going to bounce back, right? That's what you always preach, right? Yes, of course it will. But guess what? I have other plans. What are my other plans? Well, I'm closing 3 properties this year. They all have to close at higher interest rates. I have other properties that I've talked about on other episodes that are at low interest rates, 2%, 2.5%, even 4, upper 4s, for the next 3 to 5 years. So I'm not worried about those. Why would I sell those right now when I have locked in rates? I'm making money, cash flowing, principal's being paid down. But I have these new properties that I love. They're brand new. They're nice. I go in them. I'm like, damn, these. If we didn't have a house, I'd live here.
Sleek, shiny.
Because I always buy nice stuff, right? And I'm like, you know what? But I got to get the mortgage. And the mortgage is going to be 8%, 9%, 10%. I go, why would I be negative $2,500 a month on this one, $1,400 a month on that one? So be negative about $4,000 to $5,000. But people can't do that. It's hard to do that. Why would I be negative on those? And meanwhile, one of them has really went up in value because bought it back in 2017, 7 years later. It's still gone up in value in this market. One of them purchased it in 2019, at the end of 2019, and then COVID happened. It went up, came down. It's not that I've made money, but it's gone up. I might break even, or I might lose a little bit. So I'm thinking back and I'm looking at this and I'm saying, if I sell one of those newer ones, as nice as they are, as much as I want it to keep it, but if I sell it, I get rid of the high mortgage, I get rid of the higher mortgage rate, I get rid of being negatively, cash flowing, I get rid of all that. When I bought that property for $225 and now it's worth $160, I have a $65,000 loss. That stays on my record for life. If I sell one of these condos and one of them has gone up in value, if I sell that one, my taxes is about $50,000. I did the calculation. Even at the 66%, it's about $50,000. I can literally write it off against that and still have some left over in my capital loss account. Why wouldn't I do that? So I make some money here. I capture that. I don't deal with the high mortgage, high stress. This property's gone. It went down in value. If I want to go back and buy it for $150,000, I'll go back and buy it for $150,000. So I'll buy the same property for less, but I incurred the capital loss. You guys don't know, if you're listening to this and watching this, you don't know how valuable this information is right now. So let's look at quickly. Do you want to jump in before I look at a specific scenario with
I was just going to say, because it's a dollar for dollar exchange, it makes so much sense in certain circumstances. And again, this isn't for if you live in your house. We're not talking about that. This is just for investments. Okay. In that situation, it makes a lot of sense to do that. Just hearing it for the first time, I think that makes sense. Yes, you can keep the land for 10 more years, let's say, but what if it's going to help you right now, immediately, right?
Well, as I said, I can jump into the land right away.
You can get it whenever you want. Yeah,
I can jump into it at the lower price if I really want to.
Yeah.
So as long as there's a trade going on and a sale going on at fair market value, that's what the government cares about, and we want to do it the right way. This is a tool that's available to you. It's not a gray area. This is a tool because usually when the government passes laws and for example, when it comes to taxes, this is my accountant speaking to me and I'm speaking to you. Those tax laws have to be fair. So I want to look at real quick a specific scenario. So let's say you're listening to this, you bought one property at the height of the market and it's gone down. That's all you got right now. That one property, it's gone down. The interest rate's high. You're in a variable mortgage and the rent that you rented it out and the rent is not covering. The rent is not covering. You're negative every single month. So you can hold on to this property. You can be emotionally attached to it. This is the key. Most people are emotionally attached to these things. That's wrong. That's not a way to invest. You can be emotionally attached to it. Be in the hole, whatever you are every single month, negative cash flow. And you have something that's gone down in value. Or You could cut your losses, sell it, stop dealing with the tenant, stop dealing with, being a landlord, cut your losses, keep that on your record for life. Your accountant does that for you. It's with, it's with you for life. And then eventually when you're ready, when you regroup and you re-strategize and you get back into the market, because I encourage you to always be an investor in something, just do your research, do your homework. Eventually, one day down the line, especially if you're in your 20s and 30s and 40s, you've got so much time. Eventually, you will make money. And eventually, you're going to write off that capital loss against those capital gains. And that's how you win. That's how you get that money back. That's how I won with $100,000 of the stock. I lost the other 47. In that case, the tool worked against me, the tax-free savings account. It is what it is. I was betting for the other way to go, but it didn't happen. But now my property, look how it's working out for me now. Now, well, sticking on that stock example, then the loss helped me when I sold that property, made some money on it. I didn't pay. I got $100,000 back. Now I'm in a similar scenario, except with a small piece of land, and then investments that have gone up in value, and I want to liquidate. I want to be in a cash position. Maybe I want to tie up or free up some line of credit that I have, or I want to free up some loan that I have. And by selling this property, that's going to help me. It makes sense. But that's my solution for me. Your solution for you is going to look different. Maybe you're not going to write it off against a profit right now. Maybe that's going to happen down the road. Maybe you will write it off right now. Just think about it, do your homework on it, and be rational. Don't be emotional.
And I want to share something. I'm not sure if you're listening to this, if you thought about this while Matthew was talking. Let's say you have an investment property in a location, let's say that you're not maybe too happy with, like that market maybe has come down more than other markets, or maybe you're dealing with a tenant from hell, or you're dealing with a property management company that just sucks and they're running a condo building into the ground. Whatever the case is, you can still get yourself out of that situation if you're also at a loss, and realize that potential, like Matthew just talked about, later in the future, and get yourself out of that circumstance or scenario if it's a bad one, and just realize that gain after, right? Or realize that loss after when there's another gain, like Matthew was talking about. So if you don't want to deal with that tenant and you're cash flow negative, the value's gone down, if all the stars align, then this might be a really good option for you to get yourself out of that situation without completely losing, without having to feel like, oh shoot, I invested, it didn't go right, all these different things went wrong, now I'm just going to lose everything that I worked hard for. Like Matthew was saying, later down the road when you jump back into it and you invest and you do have a capital gain, you're going to offset that with a capital loss, and you were able to get yourself out of a really sticky situation if you are in one of those situations. Because you never know. What if you bought a condo investment, and what if something happened in that condo building? Someone slipped and fell and now is suing the condo corporation, right, for negligence for whatever reason. And now the condo board is saying, guys, our insurance is not covering this. We have to raise a special assessment, a levy on each unit, and you have to pay $5,000, $10,000. And you have the unit and you're like, you know what, this might be a good time to get out. And, it might be that opportunity that you were just thinking about by listening to this, where you're not going to lose all your money because you have it as a capital loss on your account, like Matthew was explaining before. If you haven't thought about that, that might be a good option to consider, especially if you're in that weird situation, right?
You brought up a good point, and the clients that I've been speaking with about this matter, and even for myself personally, I keep telling them, I'm like, it's peace of mind. It's peace of mind. Like, I was coming up with so many ways. The condos I'm closing, right? The one in Markham, the one in Thornhill.
Yep. I
was coming up with so much ways of, I'm going to move this, I'm going to move that, I'm going to sell this, sell that, blah, 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 blah. It's going to free up this. And then all of a sudden, this Thornhill condo that I'm getting an 11% mortgage on, I'm going to bring it to the bank at 5.5% to 6%, 6.5% maybe, and I'll still be negative cash flow, but it's way better than 11%. No, that's not investing. That's stupid. That's stupid on me to do that. I love this condo. Beautiful condo. Thornhill, 2 bedrooms, 2 bathrooms, prime location, faces east, lots of sunlight. You got the Toronto skyline. You got North York. You got all kinds of stuff that you could see it from Thornhill. That's how sick the view is.
That's awesome.
It's at 11% and negative $2,500 a month. Why would I stay in that? Why would I stay in that when I'm already in the game somewhere else, or I'm going to get into the game somewhere else that's going to make me money? You have to pivot. Don't put me in a box, when those of you guys who are listening, or realtors, or don't put me in a box that he's a pre-con guy, or he's a land guy, or he's a multifamily guy. I'm an investor. If it makes money, it makes sense. You already know. This Rolex is an investment. Like, it doesn't matter to me. Like, as long as it makes, but I stick with the real estate. Trust me, I always have. That one time I did that stock, it burned me, and lesson learned. I wish it burned me at $10,000, but because it burned me in a big way, I learned about this capital loss strategy in a big way. So I'm going to recuperate funds down the road when I do this. So that's why, back to the point of at the very beginning that I made about, as you get bigger, these tools are available to you. You could start playing. And if you act rationally, not emotionally, it's all going to make sense to you. You might love that property. Who cares? It's an investment. It's not where you're living. It's an investment. It's for someone else is going to live there. Someone else is going to. So you want to give that benefit of that property, as nice as it is, everything I'm talking about, to somebody else, and you're losing money. Why the hell are you doing that? Why would you do that? You're running a business as an investor, and that means that's bad business. And so that's the decision I've made. That's what I'm going to be doing. And over the next 12 to 18 months, I will be offloading certain things in an effort to then free up some space and anticipate what I have coming in the future. But at the same time, I'm going to try my best to minimize my tax burden using the tools that are available to me. That's why I'm doing this.
I think a lot of consumers have a challenge with that mindset. You know, the hard part of not being emotionally attached to it, just from what I've seen. It's hard. Like, I understand, I sympathize with people, but again, at the end of the day, why are you doing it? It's a business, right? Is it making sense, like Matthew's talking about? If it ain't making sense, then what's the point? You're stressing over what? This is a good tool that we have shared with you guys today. It's a golden nugget that a lot of people don't know about.
No.
So you got to take advantage of it. You got to talk to the right people, and you got to just surround yourself with people that just know this kind of stuff.
But Danny, why do most people not know about it? Like, why didn't I know about it? I was in real estate. I've been in real estate 12 years. I've never really put an emphasis on capital loss. Why? Because again, it's the news, it's the media, it's the information coming at you. What do you know more about than capital loss? You know more about capital gains. Why? Why is it that this secret of the wealthy, and this is a secret of the wealthy, I'll tell you right now it is, and I just shared it with you. We should have charged $5,000 per person to learn this. That's nothing in the grand. Like I just told you, I used this strategy and I made 100,000 back. That's a lot. If someone said to me in that moment, hey, toss me 25,000 and I'll make sure you get 75,000 back, I'd be like, okay.
All day.
I would right?
Do that.
So my point is that don't sleep on this information, right? But why is it hard for people to capital gains? All the people took to social media, the people that don't own any real estate. This is going to devastate the real estate market. That capital gains went up. Hello? It applies to crypto. It applies to stocks. It applies to mutual. It applies to all your investments. So is it going to tank everything? Maybe it will. But again, don't listen to people's biases. Know what their agenda is. Know what it is that they're trying to sell you. That person's agenda was to just bash real estate because they don't own any real estate. I never bash anything in a way where it's like, crypto's crap, you'll never make money. What do you mean? There's crypto millionaires. I'm not bashing it for that reason. I'm just saying understand it. And if you're speculating, that's not investing. Yeah. That's how I bash certain things. But understand this. This capital gains tax increase affects every investment. It's not just real estate. And so knowing how to play the game, capital loss, let's talk to our crypto friends. I have lots of friends that do crypto. If you are sitting in a position right now that you were hoping was going to make you a lot of money, so some of you that talk to me say we could buy a property. Honestly, I appreciate you telling me that. But if you guys are sitting on that and it's not happening and now you're scared or now it's really, you're stressed out. Like, listen, Danny, mental health is a real issue. We know people. I know someone, I was having lunch with him the other day. Someone, you know him, he's one of our clients. and someone in his building just threw themselves off the balcony. Like that stuff happens all the time. And most of the time, marriages end in divorce because of financial reasons. People kill themselves most of the time. Financial, money, it's stress, right? So don't be in that position. So some of our crypto friends, some of our stock friends, some of our real estate friends, you guys got these properties, these investments, and they are you're in a lost position right now. You don't need to be there. And if you're only there because you're hoping and praying things turn around for the better so that you can make some money and you're no longer in a lost position, then you're making a mistake. You can exit now. Free up your mind. You don't know what that's going to do for you. It's going to, knowing about capital loss. I wish I knew about capital loss when I woke up that morning and I saw the stock had crashed. I had no idea. I just imagine feeling like, bro, you lost the money. It's gone. Move on. 150 racks. How would you feel?
I'd have a heart attack. That's
crazy.
Right.
I almost had a heart attack. I was so stressed. I have the video. I'll show you after.
Yeah,
like, or one day maybe we'll show these guys, but not right now. So those moments are stressful. And I hope that this really helped you, whether you work with us or not, or work with somebody else. That is a tool that's available to you. I want to earn your business. I want to be the guy that does it for you. Danny wants to be the guy that does it for you. So I want to earn your business. So we hope we work with you. But this is a tool that's available to everybody. So take advantage of it. Don't sit in those lost positions. And if you own a property's gone down, the rents are not as high as they need to be to cover, and your mortgage is in a variable rate, you're at 6.5%, 7%. So now the mortgage is really high and you're negative equity. And you have to actually give the bank money so that you bring that payment down. Your amortization is 47 years. Don't be in that. You don't have to be in that position. If you think times are going to get better, you exit. If that works for you, you park your loss and then you invest in the future when you feel that you're in a better place to do so, better headspace, better place financially. The economy's better. The US election is gone. The federal election in Canada is done. There's so much moving parts, right? You can do that. You can exercise this option now.
And just to add to that, again, I'm not saying go sell everything. I'm not, if you're in a loss position. Listen, it's your money, it's your investment. If you are in a loss position right now, let's say you have a property and you're cash flow negative and the property is just negative right now, you can hold on to it. But how long? How long is that going to last for, right? How long until the values go back up?
What's it going to do to you?
What's it going to do to
as
you
a person
right now?
Because it made me very bitter for like a month.
Yeah. So if you're willing to take that risk and you want to hold on to it, again, we're not saying go sell everything. We're just telling you what tools are available to you so that you can use and benefit off of them significantly. And this is, like Matthew was saying, stuff that really, really wealthy people know. These are the golden nuggets, right? So if you're in one of those situations and you might not be sure of what you want to do, you just want to talk to somebody, reach out to us, guys.
Reach out to us. Call us at the office, 647-937-6455. You could put that number in the description, team, and email us, info@millennialschoice.ca. There's lots of ways you could get a hold of us. But yeah, Danny, selling that stock made me very bitter, bro. It made me very bitter. Like I was like, and you know what actually happened? You want to hear the worst part of it?
What?
You guys are going to laugh at me. I promise you, you guys know I'm not stupid. I was just like you, like in that position of it's going to turn around. It's going to turn around. It's going to turn around. So look what happened. I bought it. In the first day, I made $18,000.
Oh, wow.
If I just sold it the next day, 18 racks, done, move on. But I was like, that's not enough. This thing's going to 10X. This thing's going to go to, I'm going to make $1 million. This is how I do it, right? Then it crashes. Dude, I didn't sell it right away. I was like, it's crashed already. Might as well keep it. It's going to bounce back eventually, right? Bro, does it not come back to break even point? And I said, this is the breakout. This is now,
no way.
It's going to excel. So for example, now I bought it in 2020 and I exited it a year later in 2021. Exactly, almost a year later. I kept it that long through this roller coaster ride of emotion. And when it went back up, I was like, bro, this is like the saving grace. Like, do I get out of it? Like, remember all those feelings you're bringing with you. Your feelings, you're not rational. And my feeling was, no, it's gonna skyrocket. I wasn't acting rationally. And then all of a sudden, it went back up for like a day and crashed and it never came back. Because news came out and all kinds of stuff came out. The company was done. And I was like, You knew better. Now you knew better and you didn't do it. So some of you guys are there and you're I was mad at myself for that. So you guys are sitting there hoping for and praying for the best. And it's like, that's not investing. I know because I did that. It's not investing. You right now can exit. So then when I exited, guess how I exited? Listen, you know who my accountants were? I used to pay my accountants 15 racks a year, 20 racks a year for all my accounting. I say racks because, like, guys, this is how we talk with each other.
Yeah.
$15,000 to $20,000, okay, a year. And take that in. A lot of people would be like, "You're nuts. Why are you paying them that much?" I learned this strategy from them. You understand? So I'm willing to invest in myself that way. You guys need to be willing to invest in yourselves that way. Don't just sit there. Don't just not have a plan. Talk to us. Yeah, when you talk to us and when you do business with us, yeah, we're more expensive than the competition. The competition ain't doing this for you. The competition doesn't have a podcast. The competition is not taking time out of their day away from their business, from their families, from whatever, so that we could give you guys this content. The competition is not spending $20,000 a year on their accountants to learn the strategy and then tell you about it. That's not what they're doing. And to be honest with you, I don't see any competition anyways. I compete with myself every morning. So guys, work with us. We're one of those go-getters that we want to earn your business. We literally want to hustle for you. So just reach out. You book a free consultation. We'll sit down with you. We'll assess your situation because we might look at this scenario and we might say, you know what? Capital loss doesn't make sense for you. You might be a real estate operator and you don't pay any capital gains. You pay business income. So this wouldn't even apply to you in that case. It would apply differently. So these are all things we can talk about in more detail. We just wanted to give you scenarios, examples, potential scenarios, and my own personal experience.
This was awesome. Thanks for sharing that story though. I think people need to hear more of that stuff, that real life stuff, because this is what it is. We're not hiding anything. This is us, right? These are our experiences. This is what we're sharing with you guys, what we've learned. We don't want to keep things ever a secret from you guys. So if there's a way we can help you make money, save money, we're always down. We're always sharing. So
and guess what? When I sold it, I never looked back at what it was worth or what happened to it or nothing. I knew it was dead in the water because you know why? Ray Dalio said, he's like, most people, paraphrasing here, so don't get mad if I'm not a stock guy or hedge fund guy, but I do like listening to him once in a while. He said, most people, they act based out of fear and emotion, and that's not how you invest, right? And he's like, a lot of people always consider, this was powerful for me. They're like, they always consider the what if, which we know, we always do that in our day-to-day decisions. What if? We try not to focus on the what ifs. We teach our clients not to focus on the what ifs. But what he was saying with regards to like exiting a position or getting into a position, it's like the what if. But all you got to focus on is the here and now. That's it. What are the facts? What are the here and now? No emotion. I'm so emotionally attached to those properties, those new ones. I really am. Like, wait till you see them. You're going to be like, bro, these are literally the one in Thornhill imagine this. It's the nicest investment property I have.
Oh, wow.
Like, I don't count the office because we live in it. Technically, like we work here. It's not our primary residence, but it's our place of business. But like, when I look back and I look at my investment property, not counting townhomes and stuff, like just the condo realm, it's the nicest condo I've ever had. Wow. It's nicer than the 2-bedroom at IQ. Okay. And you've seen that one, the views and everything.
Very, very nice. Yeah,
this is nicer than that.
Oh, wow.
And I'm like, bro, when's the closing date? Next week? Hurry up and list it the next day. This is gone. Yeah. Don't be emotionally attached. I'm emotionally attached to one property. And I'm never going to sell this property. I don't want to say never, but like I never will sell this property. I don't care how much we lose, how much we make. This property is going to be in the family. And in my will, it'll say, you're not allowed to ever sell this property. Like ever.
I know exactly which properties.
Which one?
Courtyards.
Yeah. My first property that I ever bought. I have to keep that.
I respect that. That's awesome.
Because I bought it at 19. I knew nothing. I wasn't in the business. I was very scared. Did a lot of research. It was a pain in the butt. I lived there at the beginning. That property, I'm going to go against the rules. I'm going to go against what I'm telling you. And I'm going to keep it. And that's it.
I respect that.
Yeah.
That's awesome.
All right, you guys, make sure you guys stay tuned for our episode that's dropping in a couple of weeks where we look into the market stats. We're going to be talking about not mortgage fraud, but lending fraud. in a big way. We're talking hundreds of millions, more than $500 million. And that's going to drop in a couple of weeks. We hope to hear from you guys soon. Any last words, Danny?
No, thanks for listening, guys. We appreciate you guys. And like I said, reach out if you have any questions.
All right, guys. Till next time. We're out.
We're out.